Bismillahirrahmanirrahim. Hi everyone. Today in this video I am going to start the very basic concept of class 11th of accountancy. Here today we will learn the rules of debit and credit. As we have already discussed that what is debit and what is credit, how we donate the term debit. Debit is written as dr and credit is written as cr, because debit is derived from the Latin word debito and credit is derived from the Latin word credito. Now today we will discuss what are the rules and regulations of debit and credit, how any account can be debit or how any account can be credit. Okay, let us see here. Here are two approaches of rules of debit and credit. First one is traditional approach. Which is also known as golden approach or golden rules, and second one is modern approach. First of all we will learn the traditional approach, then after we will learn the modern approach. Both the approaches are very simple, very easy. So according to the traditional approach, the accounts is to be classified into two parts. First one is personal account and second one is impersonal account. Now the question is, what do you mean by personal account and what do you mean by impersonal account? Personal account means the account which is related to any person or any firm or any banking institution, any type of company, all these are personal account. It means the personal account are those account which is related to person, firm, bank, company, organization. These accounts are known as personal account. And impersonal account, all those accounts that are not included in the personal account, these are impersonal account. Now, the personal account is to be classified into three parts. First one is natural personal account. Second one is artificial personal account, and third one is representative personal account. So the personal account is to be classified into three parts, and here impersonal account is also classified into two parts. First one is real account and second nominal account. Now we will discuss all the types, bifurcative parts of this account into detail. Here first one is natural personal account. Natural personal account are those accounts which are the creation of God. Natural person in the sense creation of God. Just like Ram is a person, his account. Mohan is a person, his account. Ramesh is a person, their account. All these are the creation of God. So the creation of God related person are known as natural personal account. Here is the artificial personal account. Artificial personal in the sense, suppose A and B limited, any company, because a company is an artificial person. Company cannot be created by nature it has been created by human being. So A and B Limited, same as SBI Bank, Bank of India Bank, ICICI Bank, all these, it means those person or those firm which are the creation of human being, these related accounts are known as artificial personal account. And here representative personal account means all those persons or group which can be represent into a form is known as representative personal account. Here suppose the firm has to pay the rent. Here rent is the expense for the firm, but the firm has not paid this rent amount of this current year. So here we can write the outstanding rent. Here is the term outstanding. It means this rent amount has been represented in the form of outstanding. So this is the representative personal account. Same as suppose a proprietor invested cash or bank balance for the business, then the capital of the business, the invested money will become the capital of the business. So this is also the form of representative personal account. So natural personal account, creation of God; artificial personal account, creation of human being; and representative object or groups which can be represented. This is the representative personal account. Now see here the impersonal account. Here are also two types. First one is real account and second is nominal account. Real account means the account which is related to tangible or intangible assets. Tangible and intangible assets related account are known as real account. For example, land, building, machinery, these are tangible. Goodwill, these are intangible. So all these tangible and intangible assets related account are known as real account. Here the nominal account. Nominal account in the sense expenses or losses and incomes and gains related account are known as nominal account. So these are the classification of traditional approach. Now what are the rules? Because we have to understand the rules of debit and credit. What are the rules, how these account would be debit and credit? So here according to the traditional approach we have to remember only these three accounts. First one is personal account, second real account, and third nominal account. Only for three types of accounts we will study the rules, which rule is known as golden rule or traditional approach. Now the question is that what is the rule for personal account and what is the rule for real account and what is the rule for nominal account? So here the rule of personal account is debit the receiver and credit the giver. This is the rule of personal account. Debit the receiver and credit the giver. Suppose here is a person, Ram, deposited rupees 5,000 into the bank. It means here the person Ram is a personal account and the bank where money is depositing, the bank is also the personal account Now how we will do the debit and credit? The person who is taking the money will be debit and the person who is giving the money will be credit. Who is taking the money? Bank. So here if he will deposit, then bank will be debit, and the person Ram, he is giving the, because he is giver, he will be credit. So the personal account rule says that debit the receiver and credit the giver. Remember this, the first rule. Here the rule for real account. What will be the rule for real account? Here the rule will be debit what comes in and credit what goes out. Credit what goes out. This is the rule of real account. Debit what comes in, credit what goes out. It means, suppose you are purchasing asset. For example, purchase of furniture rupees 10,000, just for example. In each and every transaction, because you are studying double entry accounting system, so in each and every transaction you will get the two aspect, not the one aspect. First aspect will be debit and second aspect will be credit. Purchase goods of furniture rupees 10,000. How you will purchase? You are purchasing from cash. Suppose you are purchasing from cash. Now here are two object. First one is furniture and second one is cash. You are paying cash and the person is giving you furniture. It means two object here will run. What will be the first object? First object will be furniture and second object will be cash. Now how you will do the debit and credit? Which will be the debit and which will be the credit? If you see here, furniture is the real account because this is an asset, and cash is also the real account because cash is also an asset, tangible or intangible asset. Cash is and furniture both are tangible assets. So here debit what comes in and credit what goes out. Which is coming here? Furniture is coming here, it means furniture will be debit, and credit what goes out. What is going here? Cash is going here, so cash will be credit. So from these we can apply the rules of debit and credit for real account. Now the last rule for the nominal account, which is debit expenses or losses and credit incomes or gains. It means whatever the expense or loss, it will be debit, and whatever the incomes and gains, it will be credit. You are paying salary of rupees 5,000 for cash. Cash salary you are paying. How much? 5,000. Here are two accounts. First one is salary account and second cash account. Salary is just like expense for the business. It means salary and cash, here are two accounts. Salary is expense. What is the rule of nominal account? Debit expenses and losses. It means salary account will be debit. Now cash, what is cash account? Cash is just real account. So what is the rule of real account? Debit what comes in, credit what goes out. Here cash is going, it means cash will be credit here. So remember the rule of personal, real and nominal account For personal account, debit the receiver and credit the giver. For real account, debit what comes in, credit what goes out. And for nominal account, debit expenses or losses, credit incomes and gains. These rules are known as golden rules. This rule has been derived. This approach is known as traditional approach.